Okay, well, thank you so much for joining us. I've given a little bit of background already about the session. Um, Dr. Mario Hoek-Smit is the founder of the International Housing Finance Program at Wharton and taught most of us. And so it is a delight to have you here today and to talk about the research that you did recently, or the paper that you wrote recently with Arthur Ackerlin for the Terwilliger Center for Innovation and Shelter. So let me just hand over right to you, Maria, and the stage is yours.
Okay, thank you very much, Keisha. Glad to be here. There is always a little glitch here and there. I hope that the audio at least works well. Yeah. So I'm soon showing you a few slides, but let me first tell you why I was involved in this study. I'm on the board of the Terwilliger Center for Innovation in Housing, which is a new entity in the Habitat for Humanity um, organization that wants to bring more scale and market solutions to affordable housing market. So we talked about the important on the board and with the staff of housing to the economy, and how that often is undercounted, particularly in emerging markets, or not at all. So they asked my co-author, Dr. Arthur Collin, and myself to try to figure out a way to get that information together for several emerging markets, and to see whether we could quantify important component to the GDP of a country. So it focuses on what part of GDP housing really is, the gross domestic of a country. So we set out to do that, and I'm sharing. Hopefully that works well. Can you see my screen?
We can't yet. Have you clicked the little screen at the bottom, the one with the red line through it?
1 second. Yeah.
And then it says you choose your screen, and then you choose which one.
Share your screen. Yeah.
Perfect.
Can you
Yes.
see it
Can
now?
you now put it on full screen because it's
Okay.
tiny?
Yeah. Yeah.
Ta-da. Excellent. Thank you.
All right. So this is the study. It has just come out. And as I mentioned, it was started in only a couple of countries because data is a big issue. So we started with countries covering the globe, basically Brazil, Egypt, India, the large countries, South Africa, Uganda in Africa, and Egypt. And set out to see what we could do. In advanced economies where data are much more readily available, we have good data. How it is measured as part of GDP. It is measured in two ways. It measures housing investments that are made, gross fixed capital formation, the actual dwellings that are constructed, and also the capital expenditures that are related to that production. Normally, it requires comprehensive surveys that the industry is sharing with the central bank. The central bank compiles all that information and calculates the GDP of a country. It sounds very simple, but it isn't. The other component, and a much larger component of the housing sector's contribution to GDP, is the services and the consumption that the housing sector provides to the economy. And that is measured by us all paying rent or calculating the rent that we should pay if we are owners and would live in a rental dwelling, as if we were renting our own dwelling. And since the stock of housing in each country is so much bigger than the new construction, that consumption component, that services component, is a much larger part of GDP. So we calculated those figures out for these countries, and we came to roughly 2 to 7% of GDP for investment. And on the consumption, the services component for housing, 7 to 19%. But the data was very poor. And particularly, so here is the graph that we have. You can see that the dark green bar is the gross investment in housing, and the light green bar is the consumption. You can see that particularly consumption, like in Egypt, Peru, and many other countries, that light green bar is often missing completely from the national accounts. But that is a very large component of housing to the GDP. We have the United States in the column here in the gray bar to show the comparison with other countries. Brazil has made a lot of investment in housing and has a large stock and has better data. And we could see the improvement of data, the magnitude. So when we then look at that figure, on average, 13% of housing contributes roughly 13% to the GDP of each country on average in our countries. But we discovered that most of the informal housing and the housing services, the rents paid by people in the informal sector, was very likely undercounted or not counted at all. And so we tried to make an estimate of informal housing, the size of the informal market, and how much it could contribute if it was counted. And that brings the total for emerging markets, the way we saw that in our small sample, roughly to 14 to 16% of GDP. That is of the home manufacturing sector in most countries. So it's very, very sizable as an input. And here we see the measures, if we don't adjust for the informal sector in emerging markets, then we take 50% of the current informal sector as an undercount and include that. And then if the informal sector is completely left out, and that is the blue bar, that gives us that measure of roughly 13, 14 to 16% of GDP. So with that figure, most countries in times of downturn make the case to their governments, or the governments make their own case, that intervention in the housing sector can have enormous stimulus effects. And that stimulus effect comes across because of employment generation, and when you stimulate the housing sector per se, you also stimulate other industries that produce refrigerators, curtains, that is not directly reflected in the GDP under the housing sector, but it also contributes to economic growth. So in many countries, we see that housing plays a dominant role during economic downturns. But that is not the case in many emerging markets. And we were very surprised at that, certainly in this time of COVID, when housing is really the foundation of what households require, everyone is homebound in the crisis. When you have no adequate housing and sanitation, the infection rate is much higher, and that has been proven to be the case. So it was a surprise to see that so few countries that had actually stimulus packages in place to deal with the economic crisis that COVID has caused, did not focus on housing. So that stimulated us to do this study, and that is why we hurried to get it out and only could do 11 countries and hope to expand that. We tried, though, to go a little bit further and to, in that small report, it is only a short report, to try to provide a little bit of an idea on how these stimulus packages can actually be put together in emerging markets. What we noticed in the 22 countries that have housing stimulus packages is that mostly the stimulus package is geared towards that part of the housing market that already works wonderfully well, that can access mortgage markets, that has a developer community that builds the housing. But there, in that part of the economy, market, which is the top 30-20%, the impact also on the economy, but also particularly on health, the health of the people, is very limited because that sector is already well served. So it doesn't contribute in the same way to the well-being and to consumption in the economy. So I'm myself working at the moment with 4 countries that are putting together stimulus packages for housing during this COVID crisis. And we all tried to help governments to put stimulus packages together that were much more inclusive, that would focus on that large, underserved, broad, middle, and lower income segment of the population, where it would have the biggest impact. It would also try to include informal markets, the informal part of markets, and not only focus on the ownership market, but also on rental housing. Because particularly in sub-Saharan Africa, about 80% of all of the urban households are renters. They are not owning their house. So we can't afford to not focus on the rental sector and to work with community organizations. So together with NGOs, with international development agencies, we try then to put stimulus packages together that would leverage market resources and bring the positive outcomes to the economy. So what we focus on mostly, and that is the problem with the stimulus package, is short-term solutions, actions that can be put in place by governments in the short term. As all of you are well aware, in order to stimulate construction of houses and improvement of homes, you normally have a long-term agenda. You need infrastructure. You need to make land available. You have to do something to get access to finance. So housing planning normally takes a very long time, but you don't have that time when you are dealing with a crisis, an economic crisis particularly. You have to find solutions that can be put in place in the short term. And that's an enormous challenge, particularly when governments already suffer from the economic crisis. Local governments have seen their revenue tank, frankly, and so have national governments. So the focus has to be on resources that are already available in the government. And that is particularly the case with land. We cannot begin for a stimulus package to bring new tracts of land into the market. That takes a very long time. But many governments sit on a lot of land, actually. In the United States, when I look here around me, we have a lot of land with housing on it that are owned by the public sector, but the properties are tax delinquent, and the government has taken hold of those properties. That is one public land, service land source here. In many emerging markets, we have large tracts of land that are already owned by the central government, the Ministry of Education, the military, that are very well located and actually are ready for deployment into the affordable housing sector. And in order to make that new land feasible for affordable, very often we have to think of creating very quickly special entities that can focus on making that land available in perpetuity or for the long term for affordable housing, like community land trust, particularly suitable for Africa, where a lot of people are already, and a lot of countries are used to having communal lands. We can create these communal lands in urban areas by way of community land trust. And that is now done from the United States to Brazil to Costa Rica. But not very many of those have been created in sub-Saharan Africa. The idea behind a communal land trust or a shelter fund that focuses affordable housing creation is that the land is not given to the people in full ownership, but in a lease form, so that they can give the land and the house to their heirs. But the land is owned communally by the group of people that live there. So that is one very good way of thinking about quickly creating new land for affordable housing that has a good stimulus effect and will remain in the hands of a good NGO or a land trust so that affordable housing can continue on that side. The second component has to be finance. Housing is very finance intensive. Without finance, developers will not come in. Developers have to offload what they built, and they can only do that if people have actually a mortgage to pay for the house. In the informal sector, we need finance to quickly help people with microloans and micro mortgages to improve their dwellings, so that access to finance piece is very important. So in many cases, in the short term, governments have to help the mortgage sector to get access to long-term finance and medium-term finance, and that can be done. Finance is fungible, so that is a lot easier than land. So in most countries, governments know how to stimulate the housing finance sector so that it has access to long-term finance for developers, for households, for rental landlords. So that is another important component of each stimulus package. And then if needed, if there is still a big gap between the cost of housing, even if land is not as expensive, but if there is a gap between the prices of housing and what people can pay by the way of a loan for that house, subsidies may be required, particularly during a time of stimulus. These subsidies normally are of two types. They can be subsidies to households, for instance, to help households with the down payment for a house. But they can also be incentives, pardon me, for lenders to come into the market to get access to low-cost funds, for instance, or for lenders to help them with the credit risk if they have to go to the affordable market. Governments can put in place guarantees or mortgage insurance to help lenders deal with the risk that they take on for a market that they may not have served in the past, the more lower middle income market and the lower income market, and people in the informal sector. For instance, if upgrading of informal areas is part of your stimulus package, the government may provide subsidies, and they may also provide lenders that are entering that space with guarantees. Those products are now much better understood also in sub-Saharan Africa. So those are the three main components of a stimulus package that is focused on the housing sector, where governments have a very low budget. And that, of course, the sharing of credit doesn't cost the government much money. They have to make sure that they can pay for these, for taking part of the credit risk, but it is not a monetary layout right at the front of the housing construction and housing involvement. So those are good ways to think about stimulus packages. So in the study, we deal with first showing governments and others how important housing is for the economy, and that you have to show in figures, including the informal sector, what a big chunk of GDP housing actually takes. If it is close to 20%, that is not a market you can ignore. And that is a very good segment of the economy to focus your stimulus on. Then you have to show the data and make it visible, and design all your policies in the correct way so that you indeed make your stimulus package inclusive and focus on that segment of the market that has the biggest benefit, particularly in this time of enormous distress in the housing sector during the COVID crisis, the health implications. So that is what the report does, and it's very brief. But we are going to elaborate it in separate reports so that we can show better how to do both data collection as well as creating the right stimulus packages. So here I want to stop and see whether there are questions.
Thank you so much. That was excellent. We have just a little bit of time, 3 minutes left. There are the one main question is, and I don't know if any of your colleagues is on the chat, if they could type into the chat where to find the report, that would be useful. And then Felix Mukonde had the same question I had. He says the solution presented is well documented, but the biggest challenge is on how we influence other major players like government. And my question is within government. So we can have a nice relationship with the human settlements or the housing department, but we also need land and infrastructure and treasury and all of those. How do we bring those all together? Maybe you can reflect on that.
Yeah, the most important thing that I have found is to get the attention of all these people, the central bank, Ministry of Housing, and so on. And you can only get attention and the urgency behind it by showing how important the sector is. You have to have the data. Without data, you will not get anyone's ear. It is as simple as that. And that is why we started out with the data collection and show indeed in figures the housing sector is for economic growth in the country and how it is reflected in the GDP of a country in ways that many policymakers really never think about. The developers always make the case that their developments are very important for GDP. They create housing stock, employment, and so on and so forth. But that is, in fact, only a small part of how the housing sector contributes in the long term to the GDP of a country. So the first thing is to get the data together, write them up in a simple form, in a simple presentation, call a meeting of all the stakeholders in this time of crisis that is not too hard to do, and sit down and discuss what can be done in the country best to create a stimulus package. As I say, I'm involved now in Pakistan, Uzbekistan, and I was involved in Egypt and other countries to do just that. And there is, once you have the figures, people pay attention. So that is the first step.
Maria, I think that's what we're pushing as well. And I know that in the conversation that you've been having with the Terwilliger Center, that is the next step that you all are all focusing on as well, is how do we champion this data? I'd like to add that data comes both from the public sector, and critically so, and there are regulatory frameworks that govern that, but then also from the private sector. And so the private sector can provide that data as well to feed into a better environment. I'm sorry that we need to close the.
Yeah. No, I just wanted to add that your center has already started on that exercise, particularly on the investment and employment side. So for several countries, and that is a parallel session, I think, to this one, we begin to get that data. So, and CAF has played a big role in that. So together, all of our efforts will create a much better understanding of how this all works.
Thank you so much. I really, really appreciate you taking the time and getting up so early this morning. And I hope you can enjoy some of the other sessions as well. I know that this has been really great and very helpful. Thank you. All the best. Bye-bye.
Thank you very much. Bye-bye.
Okay, colleagues, there are other sessions that are starting right this minute. So please, you can leave this one, go back to the sessions tab and choose which one you want to take next. Look forward to seeing you there.